Good morning, traders. Jefferson Fawcett here with Walsh Trading. Happy Thursday, everyone. It is November 20th. It is a little bit after 7:45 here in the morning. Grain markets just paused their overnight trade. Please keep in mind futures trading does involve substantial amounts of risk. Certainly not suitable for all investors, traders, or producers. Let's take a look and see what the markets did here yesterday, what may have happened here overnight, and what might happen here today. Starting off with the February live cattle. 360 lower yesterday, 217.25 is where we settled. Lower lows, lower highs. My short-term averages, at least on my chart, the 5 and 10 day average is getting a little whipsawy here. Flip back to the sell side here with the yesterday's, or rather Tuesday's trade. Yesterday we went down through that 200-day moving average. We did set new lows for the move, getting down to 214.62. Breaking that low that we had here November 6th. So you got new lows for the month here yesterday, closing up above that 200-day moving average here. We've had 3 sessions where we've kind of gone through that average, bounced up a little bit. It's kind of been a dead cat bounce here ever since. Volume was pretty high here yesterday, and it kind of leads me to believe that they're going to try to break support here again today. Fundamentally, I still think we have less cattle and more people to feed, but the perception of the market and the sentiment has certainly changed here over the last month or so. January feeders down 460 yesterday, closing well off their lows. Got as low here as 316.80, settled at 321.45. Lower lows, lower highs yesterday. Feeders did not push to new lows here for the month, did not break any key support levels. Weird thing is November goes off the board here today, and yeah, it stayed strong yesterday. It was up $1.07 here, so that's kind of keeping the feeder market from rolling down here. My short-term averages on the January contract getting a little whipsaw there as well. Flipping back to the sell side here with yesterday's trade. Stochastics hooking back lower. The MACD is, it's about neutral, but I do think the market wants to stay kind of weak. Like I said, for the fat cattle, fundamentally everything's still bullish here, at least as far as I can see. We still have less cattle and more people to feed, but the market sentiment and perception has certainly changed. We've kind of been sideways. We've been really volatile, but we've been sideways here since, October 28th, give or take a little bit. Traded higher, we've traded lower, but really haven't gotten too far away from where we were here toward the end of October. Lean hogs were up $1 here yesterday, closing well off the highs. Did get all the way up here to 80.32, but came back to settle at 79.02. Very much an inside day trade here yesterday. 10-day moving average held as resistance, closing right at just below just above the 5-day moving average. A little bit of support there. Overall hog market, while it's been trending lower here since the end of September, doesn't really, a couple up days here and there, but doesn't really show any real signs of technical strength just yet. Stochastics are starting to hook back a little bit higher. Could be a sign that maybe we're going to get a profit-taking rally here by the end of the week, but we'll have to stay tuned and wait and find out. Still think the hog market wants to head lower. You had a doji and equilibrium day here on Monday. Bearish confirmation close in my estimation here Tuesday's trade. I think yesterday was just a test of higher prices. March corn here, big down day yesterday, 8 cents lower, 441.5, closing below short-term trend line support here. These are the lows that we've had here since Halloween, to the lows that we had here on November 17th. That was Monday. Closing underneath that trend line here, gets a little bit heavy. My short-term averages 5-10 day. They are hooking back over to the sell side here with today's trade, but the overnight session we're up $0.0125. That 50-day moving average right here, that's at 440.75. Should hold as support here in to my eye anyhow. So I would expect the corn market to kind of bounce from here. But if you're going to take the sell signal here, I'd probably recommend using a sell stop right underneath yesterday's low, which was 440.5. 440 is a nice big fat round number, so you might want to give it another tick or two below that. But yeah, I wouldn't get short here unless we start ripping lower. January soybeans are up 5.5 here in the overnight session. Down 17.25 here yesterday, following that spike high. Down 3 3/4 cents that we had here on Tuesday. Not particularly heavy, not particularly bearish. Yeah, it was a down day. With the bean market dropping that a little over 17 cents, but didn't do any real damage to the chart. Overnight, we're up about 5.5, still holding trend line support here from the lows that we've had. Excuse me, lows we've been having here since. Well, I went off the October 14th low to the November 17th low. That trend line support number here today is about 1127. We'll call that 1125 here for the sake of round numbers. As long as we stay above 1125, I do like the bean market here from the long side. Well, I'd like it then too. If we do get a retracement down, I think it's probably going to be a decent buy if we can get back to about 1110 or so. Looking at January, soy meal is up $1.90 here in the overnight session. Yesterday was down $6.80 to settle here at 321.70, closing below both the 5-10-day moving averages. That's not a particularly strong sign. Today we're bouncing up a little bit, but we do have lower lows, lower highs. Relative to yesterday's trade in volume here yesterday in the sell-off here in soy meal, the highest we've seen in that January contract. Might be some more selling pressure ahead here in the meal. I'd look to be a buyer here once we get a retracement back to, well, maybe that $3.05 to $3 level. I don't think we're going to go back through $300, but I wouldn't be surprised to see it pull back here a little bit. Soybean oil yesterday failed to hold above that 100-day moving average. That's the white line here on all my charts. Had a big strong day up here on Tuesday, gaining $1.02, dropped $1.08 here yesterday, down another 23 here today, trading between the 5 and 10-day moving averages. 50 days right under there at 50.90 might give us a little bit of support right there. There's rumors or news releases to the effect, that the EPA might be reconsidering their biofuel mandates. You got to remember, I mean, that those biofuel mandates are what put a big bullish jump in this market here back in the middle of June. If they redo those here, push those off for another couple of years, and do allow like foreign cooking oil and stuff like that back in to be turned into biodiesel, that's not real friendly here for bean oil. We are trading lower. You do have lower lows, lower highs here. If that 50-day moving average breaks, that's at 50.90. Would expect this market to go down and hit that 200-day moving average, which is down at 50 cents even. Probably even break lower than that. March Chicago wheat's up 5.5 here today. Bearish day here yesterday in wheat as well, down 9.5, but still holding right above that 100-day moving average here. Closed slightly under it here yesterday, but we're right back above it here this morning. We're at 555, up 5.5. Trend line support has held here so far, although I would peg that number of support today to be right around that 545 area. 550 is a nice big fat round even number that the markets tend to like, so I kind of think that support level might want to hold here in wheat. Fundamentally, there's a lot of wheat around the world, and that's not very, very friendly here to prices. But I think maybe the sentiment's getting changed. I wouldn't get wildly bullish, but on the upside, I could see wheat easily getting to 580, maybe even $6, although it's going to take a heavy lift to get there, and I would not expect it to stay up there for very long. KC wheat's up 3 3/4 here today. Getting a little bit whipsaw. You had a sell signal here a week ago, Wednesday the 12th. Then we had a buy signal here Tuesday of this week. Now with this overnight trade here tonight, or last night's overnight trade, short-term averages are flipping back to the sell side. 100-day moving average is giving resistance here. We've been trading right around that here for the past 5 sessions, but now we're solidly below it here with yesterday's close, and today's highs have not gotten there. That's at 537.25. On the sell side here, yeah, you might give up a little bit, but I'd make sure you had a sell. Make sure we're selling in the direction of momentum. Market's been pretty sideways here since the October 28th, struggling to find a directional push and directional momentum here in KC wheat. Other markets that I've got new signals in here today. Got to go quickly. I'm kind of running out of time. Let's see, gold and silver. Gold's down $7.50 here this morning. 5-10-day moving average is rolling over to the sell side here. Perhaps this little bounce up that we had here last week is running out of steam and the market is truly getting bearish. perhaps. Silver's down about 12 here this morning. Same thing there. Short-term averages 5 and 10 day are hooking over to the sell side in silver. The trend has been very strong here for a while, but you got kind of a double top here in silver. There was a bit of profit taking here last week once we got back up to setting new contract highs. Looking over toward the energies, I've got a new potential trade signal here today in crude oil. Now, crude oil's been kind of sideways here. Well, not kind of, been very sideways for the last month. That 50-day moving average has held as pretty staunch resistance, but we've not really fallen apart here. Not much of a trend here to the crude market, but the short-term moving averages 5, 10 day, they are turning over to the bullish side there. And the only other market I've got a signal in here, natural gas here today. Big update yesterday, 16 cents higher is where we finished. Closed up above that 200-day moving average. That's the purple line there on the chart. But this morning, we're down about 5.5 cents here at the moment in the January contract. 5, 10-day moving average is kicking out a bearish signal there. Appreciate you guys listening. Sorry all of my videos this week have gone kind of long. I do apologize for that. If you have any questions, comments, reach out. Please let me know how I can help.